So if you were the CFO of a government organization, that's what your decision would be. How would you finance a project? And so let me give you an interesting example. You had an asset which had a useful life of 20 years. Would you finance it with a bond which was 30 years? I want you to think a little bit. If the asset would last only for 20 years, would you go out and finance it over a 30-year period? No. And unfortunately, that's what governments do. What do you want to do? You want to match the asset life with your financing. Why do they do that? Remember that interperiod equity concept? Basically, they're pushing the expense to future taxpayers for benefits that they are deriving now. That's an example of a violation of interperiod equity. So this is more about government finance more than accounting, but I want to just give you an example of how things actually operate out there. So next time when you hear somebody building and financing, ask them what the asset useful life is and what the financing terms are. And capital leases. And capital leases are interesting because they are increasingly used by governments, again, in some very creative ways. And let me explain to you, and we'll get into this a little bit more. In order for governments to issue debt, they have to be constitutionally authorized to do so. They just can't go about borrowing money right and left. And what it is usually is a percentage of the total value of property in that municipality. So if you had $100 million worth of property and your debt limit was 1%, all that you could issue would be $1 million. Capital leases are interesting because they are outside that cap. So very creative CFOs use capital leases to finance their capital assets because they're outside